Hello everyone and welcome to today's morning report videos with me, Rich Perry, market analyst at Hantec Markets on Thursday 23rd of March. We've got a risk-off sentiment still in the market, although the markets are fairly cautious today. We had that terrorist attack in London yesterday, which certainly isn't going to help matters there, but generally speaking markets are looking towards this congressional sort of look at the bill, the healthcare bill that Trump's trying to get through Congress and the progress of that bill. Now if the bill fails to get through Congress, what implications does that have for his deregulation, his tax changes, and his spending plans? It sort of doesn't bode all that well. So the market's going to be looking at this as a bit of a test case, really. Relatively cautious on equities, nothing really doing in terms of direction yet today, but really interesting that we're seeing the sort of a safe haven shift in these markets. Now we've got these bond yields that have continued to move lower, slightly ticked higher today, which has helped to support the dollar, ticking higher on the 2-year and the 10-year, but mildly ticked higher on the dollar, nothing too significant. That big possible top pattern is still in place on the trade weighted dollar there, so that's something that we've got to be mindful of. In terms of economic data, nothing really. Jobless claims at 12:30, 240,000 expected there. New home sales at 2 o'clock, 566,000. Now my chart of the day is the dollar Swiss. Now the dollar yen has been sort of moving lower and breaking down the key support, and dollar Swiss is sort of moving towards a key support as well. That key January low, that 98.57 key low that we saw from January, that is a big level of support. If you see that broken down, you could sort of be coming back towards these sort of lows from the middle of 2016, around the sort of 95, 96 area. But you can see here the old pivots, 99.50 and parity have been key on dollar Swiss in recent months, and again parity came in to act as resistance on Tuesday, and now 99.50 the basis of resistance yesterday. So that is clearly a level or a range that the market is looking out for, and I think that becomes now a bit of a sell zone. You've got these deteriorating momentum indicators with the RSI sort of back below 40, MACD lines back below neutral, stochastics in bear territory. It doesn't look great there for what looks to be a continuation. Here you see the hourly chart whereby the 99.50 had been supportive and has now become resistance. We've got a little bit of a rebound that I think now becomes a bit of a sell zone. You've got that hourly MACD lines, they're just basically unwinding to neutral. Hourly RSI 60 seems to be, through this bear phase, 60 seems to be a really difficult level for the RSI to get through, and again we've just unwound to that, so it looks like it's a bit of a selling opportunity. I think we're likely to retest today's low, which is around about the 99.08 mark, I think, and then you've got the low from yesterday, 98.80. But I think it looks like we're going to be sort of selling into strength that we're getting today on this dollar Swissy. So I wish you good luck in your trading, and I'll speak to you later. Thank you.